Price is absolutely critical, right? So it is definitely not growth at any price, it's growth at a reasonable price. One has to recognize that when you find durable quality growth companies that I talked about, so the A-plus companies with great management teams in fertile industries, the market serially underpays for the durability and persistence of the earnings, cash flow, and returns for those companies over time. So their near-term valuation metrics do look a little more expensive than, say, the B- or C+ companies in the same industry, but we're willing to pay up that little bit more for those companies, for those special assets, because we think they can keep compounding earnings, returns, and cash flows for a long period of time. Having said that, we're just willing to pay a little bit more, and it has to be a reasonable price, and hence the math around the 40 to 60% upside over 2 to 3 years. So valuation absolutely matters to us, and if we're not making that upside, we're happy to sell down or move on from the stocks. So like the Tesla example, where we had more than 125 basis points in Tesla 6 months ago, we've got a much smaller position in Tesla now because of price. Probably the best example I can think of is Danaher in the US. So Danaher is a life sciences company, and so when you think about Danaher, it always looks a little more expensive in earnings because it converts 125% of earnings into free cash flow. So it trades on a low 20s free cash flow multiple for a low double-digit earnings algorithm. And it's got a management team that has done a fantastic job over time with capital allocation. So they're currently integrating the GE Biopharma deal. My view is the synergies from the deal are going to be better than the market thinks. And there's going to be a meaningful uplift in sort of the earnings revisions for that stock over the next 12, 18, 24 months. But even kind of putting that deal aside, what you pay for a stock like that is still relatively reasonable for the earnings algorithm you have over a long period of time. Also, the street is pretty slow to model capital allocation and deals that Danaher does, and over time they've demonstrated a fantastic job at doing deals. And there's a sort of intangible value in paying for management's ability to do those deals that actually create value for shareholders. I always tell people investing is 50% skill and 50% stomach, right? So the good investors have the stomach to actually ride the volatility and eat the fear and embrace the volatility, right? I mean that's really where. I mean, you can make good returns by just kind of holding on to steady Eddie stocks, but where you make the truly special returns is during periods of panic, periods of fear, taking advantage of the volatility and buying those special businesses and assets at the right point in time. So Tesla is interesting because towards the end of 2018, when the stock was at $375, we actually trimmed the stock back down because our view was the Model Y wasn't going to come out till 2020, right? So we had a 1-year lull in the product cycle. We do not expect the stock to go down from $375 all the way down to $180 and crack $180. Obviously, we would have had even less then, right, if that was the case. But because we had some, and because we had that belief in that math I talked about, the 1 million cars by 2023, it allowed us at $180 or sub $180 to keep the faith and not sell out of the stock. And the work we did around the battery cost technology and the eventual demand for the car made us comfortable around the balance sheet as well. Because a lot of the shorts, they felt like there was balance sheet risk in Tesla. They felt like they weren't going to sell as much cars. There was a demand problem. Our view was none of that was true. There was just a product lull for about a year. And the minute the market started talking about the Model Y, people would get excited again. And we've kind of seen that. Now, we have gotten paid a lot quicker than we would have expected. And the market certainly got excited much quicker than we would have expected. Hence, again, you size your positions accordingly. But it's definitely one where, Tesla definitely keeps, knows how to make life interesting.